Hi everyone, so I'm here with Darren Joseph today, who is a specialist in expat taxation matters. I'm Adam Fayed, I run adamfayed.com, and we are an expat wealth management organization with clients in over 109 different countries.
Adam, it is an honor and a privilege to be speaking with you. My name is Darren Joseph from HEJ.tax. We're a team that seeks to demystify the sometimes confusing world of international tax. So we work with expats, location-independent entrepreneurs, nomads, so described, anyone basically who would describe themselves as a private client exposed to more than one jurisdiction.
You can't just stay in London or New York and incorporate overseas, have a home office, and because there's corporate tax residence, right? So a few years ago, for a personal reason, I was thinking about repatriating to the UK. And my tax advisors, I was 99% aware of this, made it clear to me. I said, well, Adam, no matter where your entities are based, if you come back to live in the UK, you can have offshore companies, no problem at all. But obviously, you have to pay the same levels of tax because you as the owner and the director are physically in the UK. So you can have entities where you want, but obviously you start to register them. And that's part of economic substance, isn't it?
Absolutely.
What the entity is doesn't matter sometimes where the owner is as well.
Exactly. I mean, that is a fantastic point. That is a very common misunderstanding. Internet forums where all this free advice is being peddled. The idea that by incorporating a shell company in jurisdiction X, even if you remain in jurisdiction Y, it won't be taxed in Y. And you're absolutely 100% correct. By you as the key decision maker, because most of these are 1 or 2 person small companies, SMEs, right? If you remain in jurisdiction Y, then there is substance in jurisdiction Y. It may create a nexus or what we call permanent establishment if there's a treaty in play. And therefore, even though it is incorporated in jurisdiction X, which may or may not be offshore, the activity is still taxable in jurisdiction Y because that's where the economic substance lies. So you have achieved nothing really except creating a more complex situation from a compliance point of view by incorporating in a jurisdiction other than the one in which you sit and operate your company.